The 3-candle rule is by far the easiest way to become profitable fast, so much so that it even feels like cheating. Now, if someone would have told me this 5 years ago when I first started trading, I would have had consistent profitable days like this much sooner. And in today's video, you're going to learn this simple approach and how it allows traders to avoid these 2 simple mistakes, cut out wasted time and effort, and allow you to be on your road to profitability much sooner. So why is it even after years of trading, most traders are not profitable? Reason number 1 is that most traders are complicating their strategy. They're treating the market like TikTok, trading every new strategy they see, and ultimately they're trying to be too cute with all these new concepts, inducement, IFVGs, and all of that crap. But simply all you have to do is find one mechanical strategy that outperforms the market over time, and the rest is clockwork. And of course, most traders are speculating over trading. They're showing up to the charts, trading off discrepancy or speculation, but real traders test hypotheses. We test the math behind a data and we see if it outperforms the market long term. If so, all we have to do is show up and execute. And like I mentioned before, trading is math. All you have to do is apply the science and execute with proper risk management and a proper compounding schedule. And the 3-candle rule ended all of that. And now I only trade one time frame of 5 minutes a day. Now, just to give you guys a little bit of backstory of where I came from, I used to be a towel boy and now I trade full time. I worked brutal hours at a luxury beach resort, handing out towels and chasing tips, so much so that my coworkers would even question why the fact I would be running back and forth on the beach, and I simply told them that I have to get this bag. And of course, every paycheck went straight into my accounts. It was either compound or die trying. I used my job as an advantage. I did not sit there and complain that I worked a 9 to 5. I simply weaponized my job, maximized my income, which allowed me to compound my account to over 6 figures. Every extra dollar earned was ammo to buy me time and freedom. And my main vehicle was, of course, the 3-candle rule, which we'll be going over in this slideshow. So first thing we want to understand are going to be swing lows that occur in the market. So the swing lows are going to be easily identified by this middle candle here when it is the lowest out of these 3 candles. And this is going to signify reversal in the market for price to continue going higher. All right, and now we're going to go over swing highs, which are simply going to be when the middle candle is the highest out of the 3. And this is when we want to use a reversal pattern for sells to see price continuing lower. And now what this 3rd candle is really signifying is that lower time frame shift in structure, which is confirming for price to continue lower. And the main thing we want to be doing here at all times is be using confluences. My favorite one to use are going to be structure. And in this case, we can see we have a simple bullish frame here, followed by a 3-candle pattern. And now what we're really going to want to look for here is this 3rd candle to confirm price pushing up, which again, you want to make sure you're looking for this 3-candle pattern, the middle one being the lowest out of the 3, followed by the volume coming in to confirm direction going higher. And of course, next we have our swing highs, which are going to be the same thing but inverse, in this case a bearish model. We want to simply look for that volume to come in, followed by this middle candle being the highest out of the 3. And what this volume is going to signify to us is that the market is ready to push lower. Now, another way we can utilize the 3-candle rule is going to be to catch higher time frame reversals. So as of right now, price is traveling into our zone, and once we get that tap, and this is where we want to see the volume come in to confirm price going higher. And of course, once we get that 3rd candle coming in the market, we can definitely anticipate price to come higher. And the key here is to use these higher time frame areas of interest so we can confirm these levels simply using the 3-candle rule all on one time frame. And of course, I want to give you guys the understanding of what's going on the lower time frames. We're simply seeing a market structure shift followed by volume, which is confirming price to go higher. Once you guys use this to confirm your areas of interest, this becomes a very powerful model to confirm direction, and you can even catch bottoms and tops. Now let's go ahead and look at this bearish model here. We can see price is traveling into our zone, and like I said before, now we want to anticipate the volume to come in, break structure, with this being our swing high. So let's observe what price does. All right, perfect. We get this 3rd candle here, which is confirming our direction. And then of course we want to see price travel down. And what I want you guys to pay attention to is going to be this swing pattern, which makes this very easily identifiable. And now that we have a background understanding of the strategy itself, let's go over some risk management rules before we head to the charts. So let's talk about the pairs and instruments. My favorite ones to trade are GBP JPY and USD JPY. In my opinion, these deliver the cleanest structures. And from all of my data, these have definitely performed the best. And as far as execution and timing, you want to show up every day at the market close. So this is really good if you work a 9 to 5. All you have to do is show up to the chart after work, look at the market for about 5 to 10 minutes. If you see a setup, execute. If not, sit on your hands. That is very important. And of course, you only want to trade when the market is trending. Avoid sideways markets at all costs. And of course, we want to pay attention to the structures. We want to be trading the major structures, not getting caught up in the fractals, because of course, this is where you're going to get a lot of liquidations, and you definitely want to avoid all of that. And what you must pay attention to is trading with the trend of the higher degree. And of course, if you're trading against the trend, you want to be using strong POIs. And as far as trade management, we want to be placing our entry at the high or low of that third candle, depending on the direction, once the swing pattern has formed. And you're going to want to be targeting a 1 to 2 RR, which allows us to be profitable at a 50% win rate. And for the stop loss, we're going to want to make sure we're placing it at the low or high of the candle. And the beauty of placing the entry at the low or the high of the candle is that once price trades into the zone, it is simultaneously breaking structure, which is confirming the direction on top of already having this confluence of the volume coming in off of our zones or structure. Now let's go over some stats for the strategy. And of course, as we know, stats do not lie. I have over 5 years of tested data, which is over 1,000 trades for this strategy. And I've noticed, like I said before, it's going to perform the best on the yen pairs on the higher time frame outlook, specifically the daily candles. And what I like about the daily candles is that I only have to show up to the chart once a day, look at the yen pairs for about 5 to 10 minutes, take my trade and piss off. And what's really important to understand is before I took a single live trade, I had the science and math, which gave me the confidence to apply an active compounding plan to execute and scale. I personally did not take the prop firm route. I'm not really a big fan of prop firms. I'm always a fan of account autonomy, having control over your own funds at all time, and being able to withdraw my capital at any given moment. Because as we know, these prop firms can be shut down. It has happened in the past and all your money is gone. And of course, not to mention the eval phases, which in my opinion are super scammy, hence why I avoid prop firms. So now that we have a background understanding of the strategy itself, let's go ahead and dive deep into the charts, and we'll do some back testing together so you guys can really see how this strategy works. All right guys, and before we head into the charts and do some back testing, I do want to let you guys know I do have a full playbook going over one candle strategies that I've used in the past to help me compound my accounts. All of these strategies only require 5 to 10 minutes a day, followed by a mechanical set of rules. And of course, I have my 3 candle rule included as well as many other strategies I've tested in the past. I do want to make clear all of these strategies are mechanical. All you have to do is apply the systems and let the compounding do the rest. So if you guys get any value out of this video, be sure to download the PDF down below in the description. But anyway guys, let's get into the charts. We're going to be looking at GBP JPY. Now the first things first, what you're always going to want to do is identify the higher time frame structures, which we can see we are trending bullish. So now let's zoom in into this relative range and see what price is doing. And the first thing that's already very clear is that we have a shift in structure at this point here. So now combining that with the bias of the higher time frame trend, we now want to look for buys anywhere in these ranges here to see price coming up. And the way we're going to confirm these buys is again with the 3 candle rule. So let's let price play out and let's take some trades. So we already have our first setup here. So it's going to be a long with an entry at the high there, stop loss at the low. And one thing I do want to make clear is that if price trades below this level here, we want to invalidate the trade. And that is, of course, we don't get tapped in. But let's go ahead and let price play out, and we'll set our 1 to 2 take profit right there. And let's let price do its thing. Okay, so we're officially entered in the trade. And instantly profit is banged at 2R. So what we're going to do is denote this by plus 2R. At the end of this backtesting session, we'll add everything up so you guys can see how this performed over some time. So let's let price keep playing out and look for the next setup. Again, we're gonna want to be looking for buys here, and we can already see this next swing right here with this little bit of volume coming in there. And let's go ahead and place a trade there with 2R right there. All right, so this is not going to be an entry because we traded below the low before trading into this high. So we'll go ahead and delete this position there. It was a no trade, and let's keep observing price because we can definitely come down deeper into these levels, form a swing, and then start making our way up. Okay, so we have our first rejection there, and this is a pretty solid rejection off of this area of demand, so we can definitely look for some buys here. In fact, let's make this area very clear. All right, perfect. This is a beautiful swing in a bullish stature in this zone here. we definitely 100% want to take this buy, as there is a lot of confluence to this trade idea. So what we're going to do, stop loss at the high, or sorry, stop loss at the low, entry at the high, and we're going to target 2R right there, and let's let price play out. All right, so we have this next candle here, which didn't put us in the trade, but what I've tested is actually dragging the stop loss below this low, as we have not invalidated this main low yet. So we're on a lower time frame, we're simply still in this range, having a deeper retracement into the levels. So let's go ahead and keep the trade open so you guys can see what happens. Okay, we have some volume coming in. All right, awesome. Now we're in the trade. Let's go ahead and let price play out, see if take profit wants to get hits. Okay, so we did not hit take profit. We are still in this trade floating. We want to leave this position open, but simultaneously, we can look for more positions to trade while we are already in the current position. So let's go ahead and take a trade on this candle here. Now with these smaller candles, you are gonna have more risk, but the reward is much easier to achieve, as price does not have to run nearly as far as if it was, a large engulfing candle. So we can absolutely still take these little cookie candles right here. So we wanna let price play out. Okay, we're still in the trade. All right, we are officially entered in the trade. Let's make sure we're targeting 2R. Okay, that is beautiful. That is almost as beautiful as it gets, because not only did we hit this take profit, but the prior trades take profit. So in total, this is going to be a plus 2R right here and another plus 2R right there. So as of right now, we are up 6R with the system not taking a single loss yet, which is awesome. But 100% you guys will encounter losses. It's a part of the game. Any -1 you take, it's just getting you closer to your next win. And -1s are absolutely necessary to let the math of your system play out. But let's keep following price so we can take more trades. So this setup here is a little unconventional. It's not that perfect swing you see, but as you can see, this middle candle is the lowest out of the three, and we have that volume coming in. Now, ideally, this isn't really breaking any significant structure on a lower time frame. You're just going to see price breaking minor structures. We can still take this trade, understanding it is not an A+ setup, but I do want to show you guys examples of different variations of this 3-candle strategy. Let's go ahead and target 2R. Awesome. So we are entered in the trade. Everything's looking good. This is a good amount of volume. Ideally, this would just continue pushing up and hit this 2R target right here. Okay, so we're retesting the entry again. And again, if we see some volume come in here while holding this low, this is going to be any other position we can enter. Okay, yeah, so we get stopped out here. This trade ran a total of 0.77R. So if you're doing your back testing, you can just note that it ran 0.77R, collect all the data, and then even if you do your own back testing with this strategy, you can see for yourself what RRs perform the best, and then simply form your own system according to your own rules. So that way you can have the mathematical edge over the markets, and that is exactly what I preach. I don't trade off speculation. I simply create a set of rules and trade the damn system. Okay, so let's make it clear that this is a -1 RR, and let's just throw this off to the side there. Make this smaller. Okay, so what we're seeing right now, we're seeing liquidation occur of this low. So what we can actually still do is look for some volume to come in here and take a trade off of a candle here, knowing that this low would still hold, but let's see what happens. Okay, so we don't have any volume coming in, and we just go ahead and break the lows. So let's see if price comes down into some demand here, and we could take another trade. Okay, so we do have a trade right here. Again, this isn't the cleanest setup, but this is a setup you can trade because that middle candle low is still holding with the volume coming in. So let's go ahead and target 2R, which happens to be around these highs here. Okay, we are entered in the trade, and there's the volume coming in. That's beautiful. Perfect. So it taps us in right at 2R. Let's go ahead and denote that right there. Okay, so another 2RR in the bank right there. So far, we have 1, 2, 3, 4. We have 7R in the money right now. So at the end of this session, we'll add everything up, like I said, and we'll see how everything pans out. But let's keep playing price. Okay, this is perfect. So right now, we are in this range here. And again, we want to see that swing pattern form so we can anticipate price to keep going higher. So yeah, this wick ran the low. So there's not going to be a trade there. We want to see that volume come in. So not an ideal amount of volume. This did break structure, but like I said, with these smaller candles, you can absolutely trade them knowing price doesn't have to run very far to hit your 2R. So I definitely still like testing these and trading these. So we'll go ahead and take this trade for the sake of the video. No entry there, but what we can do is look for another swing. And as you can see fractally, let's zoom in here. There is another swing that is formed. So we can move entry here, stop loss there. And on a lower time frame, what you're seeing is a push up followed by another potential swing to the upside. So let's go ahead and play price. We're ranging, so we'll still hold the trade. And let's see, did it tag us in there? It did. it tagged us in, which is gonna happen. That is what you call a liquidity grab. So we'll go ahead and denote this as a -1 RR. All right, and now we want to identify these levels of demand here and look for another trade. Perfect, so we get the tap in there with the little push. So if we do get the volume with this low holding, that is going to be another trade for a buy. Okay, that is perfect. Let's move this out the way and take another trade. Entry right here, stop loss there, and let's see what happens. Ideally, this would have been the volume to confirm that we're going to run this high. Let's go ahead and set our 2R take profits. And with these bigger candles, yes, price does have to run a little bit further, but you also have the safety net of having the bigger stop loss, so it kind of cancels out. In my testing, I actually denoted the bigger engulf candles from the smaller looking reversal or doji candles, so that way I can systematically pinpoint where the system is going wrong, where it is going right. But I made sure to collect data like a scientist so I can go in on the back end and refine the system. But let's go ahead and let price play. All right, so we're in the trade as of right now. Okay, and as we can see, we have another trade forming there. Okay, so we're currently in 2 positions simultaneously. Okay, both positions are still holding strong, and looks like we got stopped out of both. So let's go ahead and denote that there. All right, we can still look for buys here. We're still in a bullish stature, so let's keep tackling the market. There we go, we get another swing. And again, we're not worrying about these losses because it's absolutely a part of the game. So let's go ahead and take a trade here as we see that 3 candle swing, with this middle candle being the lowest, followed by volume breaking structure. Okay, we are tapped in the trade. Actually, no, at this point we are now ranging sideways. Let's avoid these conditions, wait for the market to reveal itself. Maybe we want to run this high or run the low. 100% wait out the storm in this scenario. Yeah, even though there's a swing there, I want to stay out of this ideally. Okay, there we go. The market has revealed itself. So now let's keep looking for buys. This is actually a really good posture for us to take some trades. So let's go ahead and outline our zone here, our area of demands, which I teach in another video if you guys are interested. Okay, nothing yet. Okay, perfect. We have that swing position there with that volume coming in. So we'll take the trade. And remember, this is going to be the lowest candle followed by the volume. Now we can take the trade targeting 2R. So let's go ahead and do that. Okay, we are now in the trade. Awesome. So yeah, that's another +2. Love to see it. So yeah, I mean, the bias is playing out pretty nice. We're still in this range here. With this volume coming in, I imagine we're going to run this high. Let's let price play out and simply execute on our strategy. Yeah, we wicked the high there, and actually we have another swing. This is perfect. So let's come in here and let's take another trade. This is actually a textbook swing. This is as textbook as it gets, targeting 2R. And again, as we can see, we see that swing pattern here with this middle candle being the lowest and this volume coming in here. Now in this scenario, we're seeing a lot of buys, of course, because the market is trending higher, or in an uptrend, I should say. So of course, we're going to see more buys. We'll see if we can get a sell here. Ideally, I'd only be taking sells if there's a strong POI up in these levels. So let's actually look to the left. Yeah, there we go. So we want to look to the left here, and we have this big area of supply. I'm going to refine it up to these levels here. So yeah, we can definitely take some shorts up in those levels, just with the understanding that there is a strong area there. Yeah, we definitely just want to be looking for buys here. Oh yeah, we got tapped in, so let's let price do its thing. Awesome. So that's a -1. Even though this was an A+ setup in my book, again, that's going to be part of the game. So -1, and we can keep looking for buys. Just keep attacking the market, knowing that we are in an uptrend. So we'll take another trade right here, knowing that we do have a swing pattern here with this candle being the lowest, followed by the volume. Make sure we are targeting our 2R, and volume starts coming in. And we actually have another position here that we can trade off of, just following the structure, using our 3 candle rule to confirm our direction on one single time frame. Keep in mind, we've stayed on one time frame this whole video. The only time I went up to time frames was to find an area of interest, and that is why I love this strategy. It's super simple. One time frame, 5 to 10 minutes a day. But anyway, let's see how this trade plays out. Let's make sure we target 2R there. All right, we get tapped in the trade. Awesome. So this trade ends up being a win. So let's go ahead and 2R there. And another 2R right there. So that is a beautiful scenario. Honestly, I love when it happens when 2 trades get entered at once and they bang at the same time. If we see a clean swing to the downside, we can go ahead and take a trade. Okay, so yes, we see the volume coming in, but this is not a proper swing because this candle grabbed this candle's high. So we want to see one more candle form here to then start taking a sell to see price come lower into this higher time frame range. And this is the beauty of using the higher time frame, because like I said, we can easily just see price come down here, fulfilling that area, and then pushing higher following this trend here on this given time frame. Okay, so yeah, we do have that 3rd candle there, and if we go ahead and invalidate this high, we can close the trade. and that is if, of course, we don't get entered. Okay, so we get into the trade. Awesome. So that's 2R right there. I'd say this was a pretty good session. We had the case of buys just following the trend and that higher time frame reversal with that area of interest. This was a really good trade because we saw that volume come in and we just took advantage of this candle here. It was almost like a sitting duck. But let's go ahead and add all the values up. So in total, we have 2, 4, 6, 8, 10, 12, 14, 16 RR worth of winnings, followed by 1, 2, 3, 4 losses, which is going to be a total of 12R, which is pretty impressive considering that we're only using one time frame, trading 5 to 10 minutes a day. And again, the rate of your account growth is going to depend on your risk. If you're risking 5%, this would have been 60% on your account. If you're risking 1%, this would have been 12%. It is really up to you. But with the higher time frames, I tend to go higher risk, knowing that I'm taking less trades, but I do have the ability to risk more knowing there's less trades. So with this 12R amount, if I'm risking 3%, which is usually my average risk, that is an easy 36%, which is not so bad from just trading one time frame 5 to 10 minutes a day. But anyway, guys, I hope you enjoyed this session. And like I mentioned before, if you enjoyed this strategy and want to see any other strategies I have that I've used to compound my accounts, only involving one candle, definitely check out this PDF. It's going to be linked in the description. But anyway, guys, I'll see you in the next video. Thank you.